Alright, just want to record a quick video to talk about the amazing trading opportunities today on the 7th of January. So just some broader context to begin with. So today markets gapped down on some news coming out of China. This, once again, or depending when you listen to this, this is the second time this week where China had its circuit breakers on its markets switched, meaning there's too much selling. They actually had to turn on the breakers and shut down the markets. But there was a bit of anxiety in North America, so the markets gapped down about 2% across all the indices. So with that as a backdrop, gold stocks, even Bitcoin, shot up. So it was really a flight to safety today, as a lot of folks drove their money into gold stocks and gold ETFs. So I had a number of gold stocks and ETFs pop up on my scanners today, so I was watching them intraday. And so the first trade I took was on ABX, Barrick Gold. That was a classic, early bird play. Popped right out of the gate. That one quickly ran up to 3R. I trailed my stop to +1R and then quickly got stopped out within 2 bars of doing that. And that's +1R. Unfortunately, it came back too quickly. It is the way it is sometimes. It was a bit volatile in the morning. I didn't want to, that's the methodology. And it did a V-turn and just shot back up again. Now, there was the opportunity there to buy it at this level, back at the opening range high, and using this bar as your message bar. And that was a message bar. I elected not to enter that because I thought the message bar was a bit too long, and I'd have to take on too much risk. But had I taken it, that would have worked out. But in hindsight, you could always picture whatever, paint whatever you want. In hindsight, that was it worked out. But at that time, I thought it was just too much risk to take on to try to play this out. So that wasn't it though. So certainly I thought gold was in play at that point. Gold stocks were in play. Gold miners were in play. So I was keeping my eyes on a couple of other gold stocks as well as gold miner ETFs. And so ABX then quickly ran up. Had we stayed in that original position, and we without that big rip down, there was that opportunity to get up to like 7R here, went up to 9R at one point before coming back, and that would have stopped us out maybe before 8R had this little bit of wiggle here. But again, this sell-off here was probably scared a lot of people, and that scared people away from a lot of gold stocks because it looked like a pretty aggressive sell-off. But in the bigger picture, it was actually quite productive, right? You see some consolidation happening here, and this is what I was kind of watching for and looking for another entry. Whether that was going to be Barrick or some other stock, I was going to look for the best entry to express the trade. So before I move on from ABX or Barrick Gold, look at the 15-minute chart. I think is a really good, valuable lesson here as well. On Barrick Gold, this is a classic opening range break play. All right, so let me just delete some of these things here. So what we see here is a break above the opening range high, consolidation happening right on the opening range high, supported by the 5-period moving average. We have these narrow range bars, or NR5s, narrow range 5 bars, or the most narrow within the past 5 bars. And we have these dojis, this doji even appearing here. And so a buy, this sets up a classic opening range break setup where you're looking to buy on a break above the high of this consolidation bar. So at 8.45, or maybe a penny above that, so 8.47 for instance, that would be a legitimate buy. So just drawing in the risk to rewards here, you could see that one worked out very well. That would have ran up. And again, look at the Fibonacci's, right? So we draw in from the previous day's low to the current day's high, opening range high. We project that out to the 161.8 target, and that one, it hit that target right on the dot. Then sold off from that target. So that would have worked out for a 7.5 plus R return. And that's very decent trade. Or actually, maybe, sorry, my apologies. Closer to a 7.5 R return, 6.5 R return. Excuse me. So let's move on. So as I was watching, ABX, I was looking for at other gold stocks and gold ETFs, gold mining ETFs. And when I was looking at it was Nugget, because I was trading a lot of volume. And NUGT was not trading like ABX. ABX had that big, pop from the opening range in the morning, right from the get-go. That was the pop that happened in ABX. In Nugget, but it didn't really go anywhere, right? It didn't move up 4R or 3R. It just popped up a little bit and then quickly came right back into its opening range low, and then it consolidated in this range here. And at this point, I really thought that it was going to break higher, so I got ready to get long Nugget right here. I was anticipating that this this next bar was going to break out, and then do one of these types of deals. But in fact, a lot of bulls probably got long on this bar or the bar after, but the sellers quickly overwhelmed them and actually stopped them all out. I think that scared out a lot of buyers. And the reason why I didn't take this trade was because simply I didn't get filled. So it wasn't that I read anything, so I didn't get filled, because again, the way that I play these setups would be, you want to see a break above the high of this bar, right? So the high of this bar was 28.76. I had put my order, a stop limit at 28.76. So at 28.75. So the order goes in at 28.76. One tick above, 1 penny above. And that next bar never hit 28.76, and so I never got filled, which is a good thing, because this didn't work out. It broke down and it consolidated. It looked like all was over for gold at this point. It really looked like it was, it was gonna, shut down this way. Maybe it was gonna break down even further and come down that way. But again, we had a strong, buying, strong amount of momentum. Look at the buying pressure here. So look at the momentum. Look at the strong run, right? That's a very, very strong run, straight up. Buyers are back in control. So I didn't want to take this trade because I saw a lot of resistance still here, but I was looking at Goldcorp at the same time. Goldcorp is another mining stock, and this one was a lot more productive. And so I ended up getting along here at 10.47. If we go back to Nugget for a second, 10.47 was right there. All right, so look how well Goldcorp is setting up versus the gold miner ETF. So take a look at Nugget again. This is the ETF here. Now look at Goldcorp. Right? That's far more productive. That's what I like to see, because I want to see it hovering around the opening range highs. That means buyers are in control. Right? So in this case, and in most cases, the ETF is a laggard. Right? It trails the gold mining stocks, because if you're tracking the gold mining stocks with a higher beta, they're going to move first. So that was the signal bar here. I took that long on this particular candle. I went long at 12.31. I held through a bit of chop here, so there's a bit of chop, but this is actually a very productive chop. It's just chopping around the opening range high. Nothing wrong with that. This is actually a megaphone pattern. You can see that here. This is actually a megaphone pattern, or a broadening wedge. So it's basically a broadening wedge. What you want to see is a pattern like this. You want to see the lower high, so this bar right here. You draw the highs. You want to see that high get taken out, right? So this area here, when I took out this opening, when I took out that high, these are all kind of legitimate buying areas if you're playing that price pattern. I wasn't using that price pattern, but this is a confluence of things. So this is a predictive pattern, and I like seeing that. At the same time, you could draw in, if you're, this is what you typically see a lot of in these broadening wedge patterns. You see a period of divergence, where kind of where price is kind of opening up, and then you have a price converging again, right? So if we draw this in, you can see basically a triangle setting up, right? So I'll just make that a little bit darker so it's a little easier to see. And you see that triangle setup. But I was already long here, so this for me is all confluence, right? I'm long at this bar right there at 12.31, this particular bar right there, and so this is all confluence for me. Like, I really don't, this is I'm not taking a little setup. Although if you're not trading the same setups I am, this is a bit of beautiful technical pattern. We got the break there above the pattern, right? And here's where you could have gone long again, right? Now for me, I'm just buying. I bought already. I'm in trade management mode. This thing ran up to 6R, and then I got stopped out. I think I got stopped out right here at 1258 area. So it actually touched 1265. I think I might have driven this a bit. Anyways, I trailed my stop to 1259, and when this little pullback came in, I got stopped out for 1258. So it's a bit of slippage there. So a beautiful plus 5R trade. I might have gotten a bit too aggressive with my stop management, so that's something that I could have done better there, and probably captured another. I basically got low ticked on that one. I got basically stopped up right on the tick, right under the lows. So I had to kind of play with that a little more. There's again a really good opportunity here to have captured maybe even 8 or 9R on that trade, right? So that's an amazing trade. This is why I like to let my winners run to catch scenarios like this. Okay, and just one more zoom out. Look at the Goldcorp on the 50-minute chart. Look at that opening range, the opening range break. So here it is. We're consolidating on the opening range high. Some consolidation. Moving averages are productive, right? They're pointing upwards, and then we have some great price action, volume picking up and pushing the momentum. All right, hope that helps.